Okay, today is 8th of March 2023, and being yesterday market really moved uh amazingly yesterday, and we had this particular push to the upside. And if that was the question now is what is market likely to do next? And I'm going to open you guys' eye right now on how you guys can always uh, see what the market actually hold for you, so you know the bias where you'll be taking the market to. And everything I will be doing is going to be on higher time frame. Okay, I'll do it on higher time frame. Please make sure your background is calm, because I'm recording this and I'm going to put this on our YouTube so others can also have value for this. This doesn't actually happen every time. I just choose to do it. I just return from somewhere right now. Let me just get this done. Anytime you see market move so much, always the following day they're going to accumulate gather contract before they move. They won't just continue moving again. They have to gather contract and fill some things before they continue moving. Now this is dollar index, and I'm going straight up to 1 month. I'm going straight up to 1 month. Let's see what we'll have there in 1 month. Okay, this 1 month, and we're zooming in now to see what is there in 1 month. Now, in 1 month, you see that between here and here, we'll have monthly fair value gap here that has not been filled. And this market needs to come back to this fair value gap before it goes down. That's the truth. Now, this dollar index has started coming down, but it needs to pull back and trade into this monthly. That means it took a whole 4 months, 1, 2, 3, 4 months for it to come down. And now this second month of pullback up before coming down. So your bias is going to be up until you get into this fair value gap before you start looking for a pattern to sell it down. And as you're coming down, you are going to be looking at this particular zone here because they take out this liquidity. So now, knowing that this is what you are looking at now, what you think want to enter into fair value gap, so we can now go back down to weekly time frame. Now, in weekly time frame, now you have seen that here, there is a daily OB here, which is the week of this block here. Is daily OB, but between this level here and this level here is the monthly FVG. So this market needs to come into this OB here, all right, before it will go down. All right, it needs to come in and possibly tap this level before it goes down, and that is what we actually expect. You want to see this to go back up, and we'll have this particular push that was yesterday. This was last week. This week push. So market is still here. So we still want to see this thing now trade into this place. It should trade into this. Once you trade into this, all right, this level here. So once you trade into this place, before we start expecting any push to the downside to possibly take away this liquidity down. So we are going back to daily time frame. And I'll be zooming out so can get clarity. I wouldn't like to spend much time here. So as you can see, this has broken short to the upside, and we'll have this. And this is what we'll have for today. All right. Then tomorrow, we should be expecting market to open, trade into this fair value gap to take away this high. Trade into this fair value gap here to take away this particular high and enter this level. So tomorrow is going to be a bullish day for us. All right, it's going to be a bullish day for us. So that is what we have seen on our daily. So monthly is telling us the same thing, weekly is telling us the same thing, daily is telling us the same thing. So now we're going back to 4 hours, the lower time frame 4 hours. So now in this 4 hours, now we'll see market has entered this particular first fair value gap. So we're anticipating that this market needs to go back up, take away this high, then possibly fill this gap to this level. Now, but I want to know that the main level where to take this trade from to go up is what? Is from this place. Because if you take your Fibonacci from here, sorry. From this low to this high here, of course, this is where you have your OTE, optimal trade entry levels are just here. They're all here. So being that your optimum trade entries are all here, so what you're expecting to see is you want this market to go to the upside. That is what you want to see. You want to see the market go to the upside to take away the liquidity to the upside. That is what you want to see. So you want to see this go up, take away this. So, but this is where you're actually expecting this market to come to. And this is also our structural key level. So, but don't just expect this market to come down straight up. If it does that maybe it's news or something or miracle to come down straight up. But you want to see them take away this liquidity to the upside, then bounce on this particular OB here, then find a way to come down. Once they got in here, then they're moving to the upside here. So that is what we are expecting to see. So for this week, we're expecting to see, for this few days, we're expecting to see liquidity taken up outside, taking out this particular liquidity or this buy stop liquidity here, and then find a way to trade back into this FVG to fill this place. From this FVG here, especially when you get to our structural key level or this breaker block here, therefore here we can take a trade straight to the upside. That is what we're expecting to see there. All right. I hope this is clear. Guys, is this clear? Just say something so we can head up. If you understand, just type clear, 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 clear. If you understand, just type clear. If you understand it, just type clear so we can continue. Type clear so we can continue. Just type clear so we can continue with what we are doing. Great, 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 great. So let's go on. So we are going straight up to another pair, and that is EURUSD. Now, having seen that, now I want you guys to know this clearly. Just know that this market has gotten to this level here. This and when you see double top or double bottom, that means you are expecting liquidity, and we want to see liquidity to be taken out. And that was what we have a little push down here that took out this particular low. And we want to see them trade back into this fair value gap. So anything from this level here is a good spot for you to sell the market down. But you have to wait for this market. This market is actually more safe for you to sell than for you to buy. Why most of you actually lose trade most time is because you always want to counter trade. The day you stop counter trading is the day you start making money in this industry. If you are counter trading, make sure that you are counter trading, you are taking a setup that you have seen. As in that means you are counter trading. If you are counter trading, make sure that the next OB, you are taking your profit in next OB. Or if you are using your BTMN software, also ensure that once you get to 50 exponential moving average or 200, you are taking out your profit, especially once it intersects with an OB, with another block. All right. So what we're expecting to see here is we want to see this move to the upside, want to see it go back to the upside, and then if you take your Fibonacci from this level here down here, you see this is the zone we're expecting to take trade aggressively down. All right. So even if you see market get to this level here, this place now, and push down, come and take away the particular low, there's no problem. You can still expect it to see what go to the upside. If we give you a setup here to go up with them, you can follow them and go up. If you understand what you're doing, you can still follow them to go up, but note that you are counter trading. So either as you are counter trading, the next OB up, like the one you have, like a breaker block that you have inside here, as market get there, you take out your profit, then you begin to expect to go down. Some of you make money, but next thing again, you see the same money, you give that money back again to the same market. All right. So this is what we're expecting that will happen on EURUSD. And of course, I didn't just come up with this. All right. knew this because I went back to daily time frame. Then I was able to spot out what we are expecting that will happen in daily time frame. So what we'll be expecting to see market aggressively move up, I'm telling you, in no distance time, if this thing gets down to this level, we will be expecting to see Euro USD or the marathon ride, all right, or marathon ride that will give over 1,000 pips upside. All right, because this is actually a daily, this is a monthly time frame. So once it enters this particular zone here, this level here, all right, once it enters this place, this particular fair value gap that we'll have here, this is a very great setup for you to hold this trade and make this market. At least the first one should give you, I think this is actually there, it was this level here, the first one here that gave over 1,000 pips. Look at it here. Here gave over 1,000 pips. All right, this is over 1,000 pips. Then, so from here to here, will give you over 2,000 pips. So that is why, that is the reason why you need to begin to analyze your market using the higher time frame. So if you don't use a higher time frame, that means you are being blind. You must understand what the market is, what market is telling you on a higher time frame. We want to see the market come down to this level. Then once you pick it up, then we know that yes, we are riding to the upside. Okay, so then let's go straight up to another one. This is weekly time frame. We're going back to weekly time frame. And I'm going to zoom in so we can see the candle. I'm zooming in so we can see the candle. Now, this is what we have in the weekly time frame. Now, between here and here, of course, you know, we'll have lows and we'll have a lot of liquidities lying here. And this actually just like a channel type, it's kind of it is what we call the expanding channel, because it's expanding up outside like this. So once this enters this level here, of course, we'll be going up. Now we know that these guys need to come back down before they go up. All right. So that is why our bias is going to be down before going up. So now on the daily time frame, now we'll have a fair value gap. So market need to, tomorrow market will trade into this fair value gap. All right. Once it trade into this fair value gap, then we're going to have a bullish movement down that will take out this level that we'll have now with this double bottom that we'll have on the lower time frame. We want to take it out and come down. So tomorrow is good. Market will be selling aggressively, probably. If they have news, that will be awesome. Then if we go back to 4-hour time frame, and I'm zooming out. Now, this is what we have in 4 hours time frame. And this is your Fibonacci, which we took from here to this level here. So after that, we want to see them trade back into OTE. All right. Anything from this OTE, we're taking this trade down. And it's going to be an aggressive move. So sometimes you see them, they will keep doing like this. They will be building up. They will be building up like this. Until when they come in, next thing again, you see it's just like this. So that is what this guy do. So as they are doing this, they're also gathering contracts. All right, they're also gathering contracts. And also they want people who are doing trend line channels and all these traders, they will just be, you know, gathering contracts for them. And next thing again, they see, they take away the R side, maybe trade into 60-something% Fibonacci and then push down. So this is what we, the pros, what we're looking at is we want to see this when the jungle mature, then we take this trade down. All right. So you don't make yourself a liquidity. You have to be sure that you know what the market makers are doing. Then also you're also playing with them. You are playing the same card. You are seeing the market the same way they are seeing the market. So you don't just trade like a retail trader. Retail traders are good at click. They are clicking every single day. And after, in fact, they will click their brain into a chart. If you don't see setup, then don't trade. Trading is not by. If you don't see chart, don't trade. You must not trade every day. If you don't see your setup, forget about the trading. Forget about trading for that day. Wait until you get your setup, or go to another pair, go analyze some higher time frame, and get a good bias before you take a trade. All right. So the next one again we're going to is, I hope this is clear. Just type clear if you understand it. You don't understand, let me understand why you don't understand. Then I can just visit that shortly. I don't have much time to waste. You understand? Your type clear on the comment box. Clear. Is it understood? Okay, great. So let's continue. Now, here we'll have this. And if you watch, this is amazing setup. This is an amazing setup. This is GBPUSD. And the same thing with EURUSD. All right. But the difference between the GBPUSD and EURUSD is that this liquidity here has been grabbed already. This level here has been grabbed already. So this market might likely still come up as it's looking like this. It might still come down to this level before it goes up, or it will continue building up. But then before you take any trade, make sure that there's a correcting wave. This correcting wave is what we're expecting. What is that correcting wave? You want to see something like this, a build up back again into this level. Here you have your breaker block, which is also your structural key level. Then from here, you're expecting to take the market down. All right, just like EURUSD. But there is something I want to spot out here. Let me clean this so I can spot that out. Then we'll go to next pair. Let me go to daily time frame. Here. Now look at what the market is doing for today. Tomorrow, market needs to enter into this fair value gap here. And some people that have this move now, they are still believing God that this market is still going to go to the upside. To go, maybe some they don't have stop loss or something. So they are still believing the market is going to go back. See, anything built on hope, anything. We don't trade Forex based on hope. We trade Forex because we know that we'll have that is something that we have seen that's actually giving us that. It's like there's news now or something. I'm seeing charts moving up and down. Is there news or something? So we are seeing that. So now
yes, there's news at the top.
There's news, right?
Yes, there's news.
Don't think it will do much.
There's news.
Okay. Just like I said earlier, have you seen? So they need to push down. From here now, they'll start looking for a way to go to the upside. Now, this place here is their targets. As they're coming back now, they want to come back to mitigate what? This block that's here, which is the breaker block. And this breaker block is also what the structural key level. All right. And that is why we want to really see these guys. Anything from here down is a good trade. If you're taking anything from this small FVG down here, the thing don't mature already to secure little thing that you have gotten. But then it needs to get down to this level and give us a kind of correction as if they want to go back up. But once they hit this level, they will find a way to go down because this is also a fair value gap on 4 hours. Okay, so that is what we are expecting. So what we're expecting to see from this particular trade is exactly what is happening. Like I said, this needs to go up here. All right, I did this in the morning, but I forgot to post it. Then come down, you need to come down here, then give us a pattern. All right, and we can join them to this level here, take our profit out, and then we end aggressive sell from here, very aggressive sell from here down, so we can actually cut up over 200 to 300 pips. All right, anything from here, we are selling down aggressively. So after this, we will be expecting market to enter this fair value gap. When this fair value gap is monthly fair value gap, once market has entered into this fair value gap here, then that is from up here to this level, fair value gap. Then from here, we are looking for a setup to buy. That is when the market can possibly move aggressively to the upside to take away all this liquidity that has been created all these days. So that is what we will be expecting from this particular one. Just the same thing as EURUSD. Then the next one again we need to look at is gold. So gold is a metal. Now, because gold is a metal, gold does not function, it doesn't function exactly like currency. So that is why for you to trade gold, you need to at least have it in mind that your stop loss most time should not be anything below 40, 50 pips for you to be secured. So that is why you need to do analysis on a higher time frame for you to understand the overall bias of what market is likely to do. So I did this analysis early in the morning. It's over 12 hours. I did this analysis, though I forgot to upload it. I just returned right now. I just discovered I did not upload it. All right. So I said, okay, let us just run this together so we can actually do that. Then you see, we want to see this move to the upside, and always mark this time. This time, anything from 2:30 to 4 o'clock, 4:30 most time, expect movement on metals, All right, especially gold, silver, anything from 2:30 or sometime 2 o'clock as case maybe, you will see a very good movement there. So if you really understand what you're doing, you can easily get 50, 100 pips every single day trading metals. Okay, so here we have this. It has entered this fair value gap here. All right, this particular fair value gap here. Two things are involved. This market might likely give us this after it entered this fair value gap here. All right, when it get to this SKL, all right, it might still give us something like this down to take away this liquidity here and give us something like this, a correction before it goes up here. Then from here it will sell down. All right, so this is also another bias, or it may still continue going up. If it hits this particular level, look for a sell, because there is a fair value gap between here and here too. All right, and this place is our OTE. All right, so you can look for a sell and also sell this market down from that particular place. I believe you guys understand what I'm saying. If you don't understand, that means you are not my student. That means you don't really understand how this what we're doing here. Then the next one again we need to do is, let's look at another pair, which is AUD/USD. All right, AUD/USD, exactly the same thing too. We want to see them push to the upside. When they push to the upside, then from here we want to see them down. Already, this is actually in a monthly fair value gap. There's a monthly fair value gap here. There's also a daily fair value gap. So this market going to the upside here is not negotiable. It's going to go to the upside. But the question here is it going to the upside now or not? So now what I want us to understand is that here we have SKL, the structural key level, and we would like to see the market come back to structural key level before it will sell down. Even if it's selling down, there is an OB here. If it sell down, it might not likely cause a particular OB, because there is also a weekly OB here. So when this is what we really want to see here. And if you take your Fibonacci from this swing high to this particular swing low here, you know that this is where we're expecting to see this market get to. Anything from this zone, we want to sell the market to downside. All right, so that is what we want to see happens in this chart. Nothing much is going to happen to the markets today. Nothing much is going to happen, but then as we proceed, you will see that today nothing much is going to happen, but tomorrow expect them to still push this market further down. If they're able to climb up a bit to this level, expect them to go aggressively down tomorrow. All right, go to a daily time frame. You're going to spot out the FVG. Then you see them trade into the FVG. You look for a sell setup and take your sell tomorrow. All right, so here also, this is NZD/USD. NZD/USD, the same thing. We want to see them trade back into this level here. Then anything from this level here also will have structural key level, and high also will have the breaker block. Also, we'll have a breaker block there. And this breaker block here is to tell you that this is also a strong zone for this market to sell to the downside. So once they get to this level, we'll be expecting a good sell. So for here, look for a sell setup and sell this market down. This is a correction, a corrective wave. So once this corrective wave go to the upside, from here, you look for a sell setup, you can take a sell down. All right, and here it's coming down to what? To daily and weekly fair value gap. From here now, possibly we are going to get this particular move that we've been expecting to the upside. All right, so that is what we'll be expecting. From here now, expect a kind of break of market structure in lower time frame. All right, then you can take a trade to the upside. Then let's go to the next one, and the next one is USDCAD. USDCAD need to take away this liquidity on the upside, then trade back down into this structural key level here that we'll have here. All right, from this level to this level, this is where we'll have our structural key level. So once it corrects down, we're going to see go further up because that is something we are aiming up here. So this one has been mitigated. As it's coming down, it's going to break it and we'll be aiming up here. So anything from here, my guy, look for a way to take a trade to the upside. Then the next one again is USDCHF, and USDCHF, we want to see them come back down and come to this particular breaker block. From this breaker block, we'll be looking for a buy setup to go to the upside. And once we trade into this daily OB, and also that is also a kind of the daily OB is inside the monthly fair value gap. So this is the place where we'll be expecting to see this market go aggressively down. All right, so that is it. Then the next one again is NASDAQ. NASDAQ, we want to see them trade into this fair value gap here, all right, which they've done, and come down to take away this liquidity, which also they've done. They've entered into what? Into this particular SKL, the structural key level, and also a breaker block. So from here, possibly we want to see them go to the upside, but we also like to see a little manipulation that will take away this previous one and come back to mitigate this particular block. This block is important because there is a gap in between this level. So if it's come back here, then from here we'll be looking for a buy to the upside. And even if they decide to go to the upside, let me show you guys what I mean. If you decide to go to the upside, let's say we'll have this put to the upside, it comes to this particular OB here, you see expect it to come down to this level. Then from here, we'll still go to the upside. So this as a place you'll be expecting to push to the upside, or when they come here, you'll be expecting to see a compensation to go down here. From here, you can ride to the upside. Okay. So market don't just flow one side. That is why sometimes you are buying, you're losing, you are selling, you are losing. So you must understand what you're expecting to see the market do, and let the market do what market need to do before you do anything. You don't just take action or begin to trade simply because you see candle moving very fast. Then the next one again is this is a concise a kind of analysis of what the market in the next 3 weeks, 4 weeks. You see what I'm talking about, see playing out in the next 3 weeks, 4 weeks. You see it's still playing out. All right, so we still want to see this guy trade back into this particular zone here. All right, and here we'll have a breaker block here, and this also a kind of a structural key level here. All right, then from there we'll be looking to sell down. All right, so those who are trend line traders and all those stuffs, who are already like this, all right, they will become a liquidity for us. All right, so we need to take them out. So this is a wedge pattern, peanuts. All right, so this is what we'll be expecting to see from this particular trade. Then the next one is USDJPY. USDJPY, just like I analyzed, that it needs to come down. It needs to come down. This market is almost done. It's almost ready. Is almost ready. Now, trading into this particular place there, look for a buy setup from here and take this trade to the upside. Let's see if we can make some money on this particular trade right now. Let's go to a lower time frame, like 15 minutes, all right, and see what is happening there. You need to still come down a bit, all right. Let's go back to 5 minutes chart. We need to see what the market is giving us. We'll have 10 minutes to round up. Okay, so it came back to this particular OB here, and it needs to come down to take away this liquidity down. It needs to hit this level for us. So it's from here now that we'll now look for a buy setup. Let the market, let the jungle mature. It needs to come down. It needs to come down. It hit this OB. It needs to come down to take out this liquidity level that we have here. So here, this is a sell stop liquidity. We need to take it out first. For those who bought earlier, we need to take them out. Okay, from there, you now look for a setup to buy the market to the upside. So the next one is, I think we need to go back to our 4 hours. We're rounding up the last but not the least the question is, why are we looking for a buy setup? This is a fair value gap here. So we need to take a trade. And as you're taking this particular trade here, please know it that your target is not going to be lesser than this level, because we need to come to this particular level. And this will give you over 244 pips, almost 250 pips. Okay. So if you take a buy setup, please hold the trade and milk the market. Don't be in a hurry to end a winning trade or to cut a winning trade. So JPY, and this was exactly what I analyzed. You need to go to this place and then come back down here. So that is what they're actually doing. Then from here, to trade into this fair value gap here, and then take away this high and come to this weekly fair value gap. Once you trade into this level, look for a buy to the upside. Okay, you want to take a sell, wait for it to trade into this fair value gap here, look for a sell position to go down with it. After this one has been mitigated, once you come down, it will break it to come to aim this particular weekly fair value gap. So this is where we're going to end this particular section. You have any question now, please kindly ask your question. Any question at all, I'm unmuting you so you can ask your question. Just 1 or 2 questions so we can call it right there. Any question briefly? You have any question? Any question, guys? Any questions? I can unmute you now. Or do we all understand? Okay, guys. So thank you very much. It's nice having you here. So please, for those who are not part of who have not taken their training, or there's anything you need that is confusing you, chat me up. Let me know how to make our time and take you some special training. Okay, so thank you guys very much, and you have an amazing trading day. Thank you.